Huh? Cameras? Thank you. Good evening, ladies and gentlemen. Thank you very much for being here on this rainy evening. We're delighted to have announced our first quarter results. And as usual, request Chandra to walk you through the highlights. And after that, we'll take questions as normal. Chandra.
Thank you, Pradipta. First of all, thank you all for being here. It's really raining, and very glad to have you all. I'm delighted to report that we've had a fantastic quarter, and we start the year very strongly. The highlights are the volume growth is 5.7%, and in revenue terms, constant currency growth of 4.8%, rupee terms 2.6%, dollar revenue growth of 5.5%. And in terms of margins, we had a number of headwinds this quarter, a 10% wage hike, and an impact of an appreciating rupee, and a one-time depreciation charge. In IFRS, we have had an impact of almost 199 crores, which is about 79 basis points, and the rupee is about 73 basis points, and then we've had a wage hike as well. And all of these have been overcome, and still we have delivered an EBIT margin of 26.3%, which is pretty much in our target range, which we have said will operate between 26 to 28%. And then the net income, all of this has flown through and affected the net income. And the net income has been at a credible 23%, 22.9% at 5,058 crores in IFRS. And on the Indian GAAP, I want to highlight to you the one-time charge we took in depreciation on the IFRS side. In the Indian GAAP, it's a positive because of the treatment of over 400 crores. And so that has resulted in a higher net income of 5,568 crores. So I want to highlight that so that you can reconcile the net income numbers between the IFRS and Indian GAAP. And it's our 10th anniversary of IPO, and the board deliberated and has declared a special dividend of 40 rupees per share. Incidentally, we have crossed 40 quarters since IPO. And also for this quarter, we have given a dividend of 5 rupees per share. And the other things I want to highlight is in terms of dollar revenues and incremental dollar revenues, 191 million. It is the second highest ever incremental revenues for TCS in a quarter, and the highest in the last 12 quarters. In terms of the growth, is pretty broad based. US has done exceptionally well with about 5.7% growth. And the growth in Europe, growth in UK, growth in India, all are in the 5% plus range. So it's very, very good. Obviously, India has delivered. We have had a muted growth only in Middle East Africa. And in terms of the industries, it's again a fantastic growth all around. All our industries except BFSI have grown round about 5 or above 5%. There are industries which have grown even 10%. BFSI has been muted, primarily due to insurance. BFS has done extremely well, and we have had a weak quarter in insurance. Otherwise, I think it's been a very well-rounded, broad-based growth across the board. And in terms of people, we've had a gross addition of over 15,000 people, and the utilization is benchmark at 85.3%, excluding trainees, and about 80% including trainees. So it's a well-rounded performance from all operational parameters point of view. In terms of the deals, we are happy to announce 7 large deals during the quarter, spread across 6 different verticals, and then spread across markets. US has done very well in the deal flow, so pipeline is strong, and as I have said in the press release, we are off to a good start, a strong start rather, and we continue to be seeing opportunities in the marketplace and feel good about where we are. Thank you so much.
Thank you, Chandra. The first question tonight is from CNBC, Kritika.
Hi, gentlemen. Congratulations once again on a good set of numbers. Our first question to you, Chandra. We've been talking about the pressures that the domestic market has been seeing. Are the pressures behind us now? And can you just touch upon where the growth came from in India? Also, insurance, by when do you expect to see those issues resolved? Possibly within this year. Can you give an outlook?
I think from an India point of view, we will be still cautious, and I wouldn't say that we'll start to see high growth. The growth has been pretty distributed. In India, is no specific one-off, and in fact, if you really see our revenues based on SI contracts, as you can see from the equipment based revenue, it's gone down from even Q4 levels to Q1 levels. So it's all services revenue. So that way we are very happy with the kind of revenue that we have got in India. But we'll continue to watch. And as I have said that I'll be happy if the India volumes start to pick up towards the end of the year. And about insurance, I don't think that you should read too much into it. And it's not something to deeply worry about or make any caution. And so I don't give a, I think it will continue to grow, but the growth may not be very high, but it will continue to grow.
Is that the same case for Middle East and Africa?
Yeah, Middle East and Africa, I think should. See, all these markets like India, Middle East, Africa, etc., still don't have the size to be able to buck the trend all the time. So sometimes you have to take a hit, but I think it'll grow. We expect it to grow in the coming quarters.
Okay, Rajesh, can you break up margins for us? Because despite the 199 crore impact, one-time impact, you have been able to get in a fairly good set of margins. Can you break up the impact of wage hike, the impact of currency? And you already said it's a 79 basis point impact of the one-time hit.
So the impact of currency is about 73 basis points negative. Depreciation one-off charge is 79 basis point, which is 175 crores. And 219 basis points due to the wage hike. And we have been able to deliver operational efficiency improvements to the tune of about 85 basis points, which adds up to the totally about 285 basis points down.
Okay. Also, Rajesh, there's been some hints of pricing pressures being seen across the industry. People are talking about some pressures from developed markets. Do you agree with that? And how has pricing been for the quarter?
Pricing has been fairly stable. As we have said, it's kind of bouncing around a certain range. We have not seen a pricing trend either direction. You need to see some of what we report is realization, and that is a combination of business mix. So typically, when you see growth coming from markets like the United States, you would see a realization point which is slightly lower. When growth comes from European markets, you will see realization that's better. So as the geographical mix changes, realization tends to get. We have not seen a specific trend in pricing either in either direction.
Okay, last question. Ajoy, you had given your hiring target for FY15. How many employees have been absorbed so far? And can you break up campus recruitments and lateral as well?
Yeah, so we had said that we will be hiring 55,000, right, as far as this year is concerned. And we are on track. We had given offers to about 25,000 campus hires. 3,000 of those have already joined in this quarter. And the rest of them would join in Q2, Q3, Q4 as per our standard practice.
Thank you. Next we have Ritu Singh from ET Now.
Hi, Chandra.
That's why.
Yeah, I can hear you.
It's on, it's on.
You maintain that you will keep the margins in the 26 to 28% band. This quarter we saw currency appreciation and wage hikes impact that. So how are you reinvesting in business to ensure that you can maintain that margin, A? And do you think currency will be one of the biggest risk factors when it comes to FY15 growth?
So I think a couple of points to note here. One is we reinvest our excess margin in businesses in a very prudent way, and sometimes we will do it in a very calibrated way. That is why even when the margin was about 29%, we have always been suggesting that our comfortable range is between 26 to 28. It doesn't mean that it will not go up in a particular quarter. So if it does, then we will look for the right opportunities to invest. So I can't really give a definitive plan. In this quarter I'll do that, in that quarter I'll do that. So it is in new initiatives, it is in new markets sometimes, it is in any kind of a strategic initiative that we can see. And currency will be a headwind, but we have maintained that as long as there is no big volatility and the currency is moving in a very narrow range, we will be able to manage it by operational measures. If obviously in a quarter the currency goes haywire, then obviously in either direction you will have a problem.
You maintain that digital technology will drive a lot of growth for TCS, and the Modi government's focus has been on e-governance. Even the rail budget highlighted e-ticketing. So what is the kind of opportunity that TCS sees from these measures that were announced?
See, we have always said that it's a big opportunity. This whole digital technologies are presenting new possibilities for businesses, governments and society at large. So we have been saying that everything will get reimagined. Business processes, business models, whether it is a B2B company, B2C company or governments. So it's going to play a very major role, and we have been investing heavily both in terms of building capabilities and also in terms of building intellectual property and foundation software, etc. for the different industries in which we operate. And we are seeing those opportunities coming to fruition, and definitely in India and in the Indian government sector there will be opportunities. I can't quantify it now, and as I have said, we would like to wait till it picks up and would not like to count ahead.
Rajesh, I want to clarify on pricing once again, because one of your closest rivals just last week said the pricing had slipped in the last quarters. That has been sort of the trend. Do you see any pressure because of that going forward?
As I said, we don't see a specific trend in either direction. Obviously, certain contracts will be under pressure. Some other places you might get an uptick. We'll call it out in either direction once a trend is clear. As of now, there is no specific trend, up or down.
All right, thank you.
Priya Shet, Bloomberg TV.
You said you won 7 large deals across verticals. Can you give us a breakup as to which verticals have seen a maximum number of deals and the kind of pipeline going ahead?
We have 2 large deals in retail, one each in life sciences and high tech, banking, insurance. So these are the different verticals in which we have won. And in terms of our pipeline is pretty strong. If I have to name a number, I'd say at least 8 large deals that are currently under discussion, I would say.
Any space that you would like to point out?
I think, it's very broad based. See, the thing that you will see when you see our numbers is pretty much across verticals. There is media is doing well, utilities is doing well, energy and resources is doing well, life sciences is doing well, manufacturing is doing well. If all these sectors, high tech is doing well, everybody has delivered 5, 7, 8% growth, and one industry has grown 10%. Okay, so I think across the board there are deals happening, and there's a pipeline, and I think there is agility in the entire business, and that's what we like about where we are.
And in terms of client spending, is it panning out as you had expected in the beginning of the year?
Yes, so far I think we are pretty much seeing what we were forecasting, if you will, or what we were hearing 3 months ago. There are opportunities around 3 different initiatives. There's a huge push towards simplification and huge push towards digital and huge push towards governance, which includes compliance, risk, and so on, and regulatory changes. So we are seeing that across verticals, and there's no change in commentary.
Next is Pankaj from NDTV.
Hi, Chandra, this is Pankaj from NDTV. Just wanted to get a sense that a lot of IT companies have spoken about talent not being able to retain. Can you throw some light on what has been the attrition, and is that a problem at TCS? And secondly, do you see, you spoke about the pipeline, but do you see the entire IT spend also being increased globally versus what it was?
See, to answer your second question first, I think we always talk about addressable space. Okay, we don't talk about the overall spend, because sometimes customers will drive efficiency, and whatever is the benefit they get, they will reinvest. So from our point of view, I think we continue to address more opportunities than we've been addressing in the earlier periods. So it's a positive thing. In terms of attrition, I think we continue to have a fantastic retention, and our attrition this quarter is 12%, up from 11.3%. But then every year, first quarter, the attrition will be a little high, because there will be people who will be leaving for higher studies and so on and so forth. I think our attrition and retention, whichever way you look at it, is pretty strong, and we are very happy where we are.
Right. I was also checking your utilization, which is at 85%. Do you expect to maintain at these high levels?
See, I have always said that, for a company of TCS's size with 300,000 people, going by the percentage does not make sense. I've always said that there is a lot of room on utilization, and we will stay at 83.5. We may go back slightly below 85. We may exceed 85.3. It depends on what the opportunities in the marketplace are. Our single-minded focus is to be relevant to customer, and then be agile in reacting to and responding to what the needs are. If that means my utilization has to go up, it will go up. If it means that my utilization has to stay where it is, it will stay where it is.
Thank you.
Next we have Reema from CNBC.
Good evening, gentlemen, and many congratulations on a very good set of earnings. Chandra, my first question is on BFSI. When you had held the analyst conference call about a month back, you indicated that BFSI growth will be largely in line with the company growth average. This time you've said it's muted. So is there a change in assessment about your outlook on BFSI, or do you continue to maintain that growth will track the company average for the full year?
BFS this quarter has tracked the company average.
I thought you said muted, so I assumed it would
BFS has tracked. Insurance has not done well this quarter. So I think insurance will grow from here, but it will be muted. So overall, I think for the full year, it will pick up. I don't see it. Either it will be either on par or slightly below. I don't think that there's going to be a huge variation. BFS is quite strong.
Okay. US has been very strong for you all, and even your peer last week reported a pretty decent set of growth from US. Is that sustainable, or is there anything in the outlook which makes you believe that this strong 5.7% growth in North America is not sustainable?
So we don't give guidance, but we have said that US, UK, Europe will continue to grow very well. We see lots of opportunities. Even in the 7 deal wins we have announced, 4 are from the US. And if you look at my pipeline, US is pretty strong. So we will continue to do very well in the US.
So nothing in the outlook over there makes you fear that this growth rate might not, anything can hamper the
I'm not commenting on the growth rate, but we will continue to do very well.
Okay. Okay. Let me come to FY15. You've always maintained, I think for the last 2 or 3 quarters, that FY15...
I maintain the same statement.
it's better than FY14, fair enough. But this time around, you've also got a joint venture with Mitsubishi Corporation. So the organic growth will be better than, organic growth in FY15 will be better than FY14. And on top of that, you've got additional $375 million is what we're assuming from the Mitsubishi Corp, right?
I think there are two comments on the commentary regarding FY15 better than FY14 and organic growth, etc. That's what I've said, and I'm sticking to that. In terms of, though I'm not going to give you what the number is going to be, etc., because we don't give guidance. And we have started off very well in Q1, and we've got to see how we do in Q2 and how again Q3 and Q4. In terms of the Mitsubishi joint venture, we have concluded the deal on time, and it is operational from 1st of July. But the incremental revenues from the joint venture may be lower than the 375. We will quantify that during the course of the quarter for a couple of reasons. One is that now we have a deeper knowledge about all the contracts. Second one, also yen has moved significantly against the dollar. So when you look at the dollar, and I think there's a big hit due to that as well. So the actual volume of revenue that will come in Q2 from the Japan JV will be lesser than the original number.
How much lesser? Give us a ballpark. Would it be $50 million lower?
No. We'll come back. We'll come back during the quarter. It's not important at this stage.
Would it also affect margins?
What's important for you is that will be an add-on revenue.
Okay. So the two takeaways that we'll take away is organic growth in FY15 better than 14, but Mitsubishi the revenues from JV is lower than what
the better takeaway is that I'm sticking to what I said before.
Okay. Retail was flat last quarter because of the weather, the adverse weather. You won 2 large deal wins in retail.
Yes.
Last question.
Okay, last question. 2 large deal wins in retail. What's the outlook looking?
Retail has done exceptionally well. This quarter, retail is a little over 7% on a sequential basis. Okay, so retail has done exceptionally well, and we expect retail to do very well going forward.
Thank you.
Joshel from Economic Times.
Can you hear me? Just one question. You've been talking about digital as an opportunity, and I believe you said in the last quarter that the deal sizes were picking up there. Could you give us some color? Are we beginning to see, large, big-ticket deal sizes in digital?
So you will never see a $100 million deal in a single deal, but there'll be lots of smaller deals adding up to an initiative, a digital initiative which will be larger. And we are seeing that. We are seeing opportunities in what we call as omni-channel, multi-channel, analytics, big data, and cloud infrastructure, and so on. We are seeing all those opportunities. And we said that it's a multi-billion-dollar opportunity. So
when the lots of small deals add up to the big deals, do different companies get different parts? Can TCS maybe get all the initiatives that add up to that big $100 million?
It can, and we would like to.
Thanks, Rochelle. Beryl from Mint.
Hi, Chandra, just if you could repeat once again the reasons why you said the Mitsubishi deal, the income may be a little lower, and also anything on the discretionary spends, if you could just give some outlook.
During the course of the quarter, we'll quantify that because we just started. Primarily due to the movement of the currencies, actually. So the dollar terms, you will find the revenues to be a little lower than what we originally indicated. But that's that can change if the currency moves the other way. So it's I think it's not a topic that we should worry about now. But we're pretty happy with the JV. We concluded great set of clients, phenomenal teams, and we already started the integration process. The whole new team is in place, and we've had a town hall, and we're meeting all customers at this point in time. So we're pretty delighted with that transaction, and we are going full blast in Japan with that initiative. Then with regard to the discretionary spend, I think it's pretty much in line with what I've been saying, and most of the discretionary spend is towards digital, and it's across sectors, even sectors which are under a lot of pressure. They do the simplification on the one side, and they do the digital reimagination or enablement of the business using digital technologies on the other side. So you see that as a key theme.
And the SMAC contribution, could you give us any?
Which one?
SMAC contribution? Digital
contribution. We don't break it out yet.
Okay, thanks.
Pankaj Mishra from ET.
Hi. Two questions. The first is on healthcare and the overall Obamacare opportunity. I mean, we saw some mixed commentaries over past 6 months. We saw Cognizant giving different signals, and the overall sentiment about the opportunities of Obamacare, and do they look softened? And I mean, compared to how bullish everybody was, I mean, what is that you pick specifically in healthcare and Obamacare?
Healthcare, we have had an excellent growth. We continue to see an excellent growth in healthcare for a number of quarters now. It's been upper single digits for multiple quarters. If you go back last quarter, quarter before, and current quarter, every single quarter has been upper single digit growth, and we see that opportunity in healthcare to continue. With respect specifically to Obamacare, I had mentioned in multiple calls before that we are not playing big time in that space. So we have some few opportunities. We are not a big player in that space, and so I really can't comment.
Sure. And just final question on, just wanted an update on Diligenta, and how have you really been able to take it beyond the UK market? And I mean, does it look like a big opportunity in other markets, and what's the progress like?
We have now a few proposals in markets outside the UK. It is clearly the intention, and I'm positive that we will win more business outside the UK. Not that the UK is dead either. I'm sure we will win more business in the UK too.
Pankaj, anything else?
No, I mean, I wanted more.
No, Diligenta is a multi-year opportunity for any deal, because the deal sizes are pretty large, and also the deal timeline is pretty large. And we are currently in discussion at least in 2 different markets, but we have been in discussion, and hopefully we will convert, because once that comes in, then that market opens up, the product will be made compliant to the regulations in that market. So I would just ask you to look at the Diligenta business and the opportunities on a year-on-year basis, and don't expect the commentary to change on sequential quarters. Yeah. So I'm fine. So I just wanted to mention that there are opportunities in the UK we are still pursuing, and we are actually looking at 2 different dimensions in that business. That business is the life and pensions platform business, and predominant policies that we serve today are closed books, and we want to get into the open book. And in the last transaction we did, there is a certain volume of business which is open book. So we have the product enabled for the open book. So we want to go after the open book opportunities on the one side. The second opportunity is to go after different geographies. So it's a lot of work to do, but there are lots of opportunities. So it's a marathon.
Thank you very much, ladies and gentlemen. Please join us for a cup of tea outside. TV cameras, come up please for your bite.